Thank you all. It's really exciting to be here. We have such an amazing partnership with the folks from GSV. And not only in terms of the capital that they've invested, but really the intellectual capital. Mark has been an amazing addition to our board. Despite his youthful appearance, Yoda-like in his wisdom, and so it's really great to get to work with everybody from this team. Let me see if we can get to the. I think this is the last slide as opposed to the first slide. There we go. We started Aspiration really with a central question that we had in mind. Imagine if there was a financial firm people actually fell in love with. Not liked, not put up with, not held their nose and did business with, not worked with because they had to, not the cheapest one out there, not the one that has the best UI or even the best technology. A financial firm that people actually loved. Obviously doesn't exist today. Obviously almost seems like a contradiction in terms. But it shouldn't be. If you think about it, banks, financial firms really are about helping you do everything that you want to do for yourself and your family. They're the repository not just of your money, but of your dreams and your hopes and your wishes and all you want in the world. And you have these gigantic institutions with hundreds of millions of customers and hundreds of billions of dollars of market cap. And yet they are some of the least liked institutions in America. 4 of the top 10, of the bottom 10 least liked brands in America among millennials are the 4 biggest banks. And the question is of why is that? It's not just because the technology is antiquated, though it is. It's not just because the features aren't up to par, though they are. It's not just because they charge you way too much money, though that's a big part of it, and they do. It's because of a lack of trust. 8% of Americans say they trust their own financial institution. Stop and think about that. That's where they're putting their money, and only 8% of Americans say they actually trust that institution. And they trust it in the sense of, if I'm going to put $5 into the ATM, I'm going to get $5 back out again when I need it. But what they don't trust is they don't believe that that institution is on their side. They don't believe that institution has their best interests at heart, and they fundamentally don't believe that their incentives are aligned with the institution because, frankly, they're not. The way that the financial model works for big banks is one that's very different than one built on customer success. If you're not solving for trust in this space, if you're solving for one of these other very real challenges, all of which have to be addressed, you are missing the 10,000-pound gorilla in the room. And so for the banks, they're facing a real challenge. You saw Michael Moe's slide about Sears earlier today. You know, the other great example, or one of the many, many great examples in many industries across America is Blockbuster. And you all look like a reasonably well-versed crowd of people. I'm sure you know this story. Less than 10 years ago, the CEO of Blockbuster was asked and quoted as said, Netflix is not even on his radar screen. A few years before that, Reed Hastings flew out to Texas to meet with the CEO and said, I don't know, we're not really growing much. Will you buy us, please, for $50 million? And he said, no, not interested. These things happen fast. These things take a long time, but then they suddenly move quickly. And what happened with Blockbuster was not only were they weighed down by that brick and mortar operation and all the costs associated with it, but they were weighed down by an outdated business model. They thought that people were always going to want to walk into that store, and they really wanted to go talk to that guy behind the video counter to get his recommendations. That's not where our society was heading for all the reasons that you know. And their business model became not about providing great entertainment, but about hoping that the customer messed up, right? Who here knows how they were making a big chunk of their revenue? People forgetting to return their VHS tape, and even more people forgetting to rewind the VHS tape. Remember that Be Kind rewind? And getting charged if you forget to rewind your tape. That's how they were making their revenue. They were making revenue on customer failure. Again, we all know where this analogy is going. And you see the amount of fees being generated for banks, and almost all of the revenue coming from so many of their customers coming from overdraft fees and so on. It doesn't mean that Bank of America and Wells Fargo and so on are going to go the way of Blockbuster. But it does mean that 10 years from now, this industry is going to look very different. And not only are you going to have a whole bunch of new players there, but the industry itself is going to be significantly larger. When you're talking about financial services and consumer financial services, you're already talking about the largest industry in America in terms of profits and revenue. I believe it's going to be significantly larger because you're also seeing enormous latent demand. You're seeing so many Americans who are not building assets, though they should and could. So many Americans who are facing challenges around income volatility and expense volatility that are very real and significant, and literally their number one top concern when asked. And there is an enormous opportunity for financial institutions to solve those problems. But it won't be the same kind of financial institutions. It used to be, if you were going to create a marketing plan for your bank, you would literally build a branch, draw a red circle on the map around it, and that was your addressable market. When I was probably 7 or 8, I got a check from a relative for my birthday, and whatever it was, $25, $30, and my mom took me down to the corner near our house, and I opened my first bank account. That bank was then bought, and it was bought, and was bought, and eventually became a Bank of America branch. And I ended up with a Bank of America bank account. Who here got their first bank account because it was the branch that was closest to them? So, majority. Who here went to a branch that was, even not the closest, one of the closest to them? So almost everybody. That's no longer the case. In 2015, more people interacted with their bank through this than by going into the branch. In fact, today, 46% of banking customers are digital only, and only 10% are non-digital only. That Google generation that Michael Moe described sees going into a bank branch as going into Dante's seventh circle of hell. And they want nothing to do with it. But how are they going to choose? If you can access any bank in America through this, how are you going to choose? And it's not going to be based on the branch that's closest to you, it's going to be based on the brand that's closest to you. What speaks to you, what engages you, what is the place that you want to put your money and your future, and actually have that place serve as that repository for your hopes and dreams. And that's what we're doing at Aspiration. We believe that the next great financial institution, next great financial institutions, will be the ones that marry both the best value proposition and the best values proposition. Because what we know from that Google generation is they are highly attuned to ethics, to values, to sustainability. They have that set of concerns in every purchase they make, whether it's what kind of coffee they're buying or what kind of shoes they're buying. They put those things front and center. And not only is that also true for banking and financial services, it's more true there than in any other industry overall. And so for Aspiration, what we started with is where almost all of us start with our financial lives, the core financial product, which is our checking account. It's a hard account to open. You have to get people to switch their direct deposit, which means they have to print out a form and take it to their HR manager. They have to change bill pay and so on. But it's also the most sticky account, going out and coming in as well. And it's the place that it has the highest form of engagement. And so we created this bank account that Money Magazine, about 3 months after we launched it, said was the best bank account, best checking account in America. 1% interest, so 100 times higher interest than what just about anybody's getting from any of the banks out there. No monthly fees, which if you have a balance of $11,000 and below, which is the vast majority of the country, means you're paying $25 to $35 a month in monthly fees at a time that most people can't afford a $400 emergency expense. No ATM fees, the $5 a engagement charge that people are paying as a tax to access their own money, sometimes when they're taking out $20 or $40. And so literally created that account and made it available to people at a $10 open deposit. And then we took a step further. And you saw from the video what we just launched about a month ago, which is AIM, Aspiration Impact Measurement, where you can, in your own Aspiration banking app, every time you swipe that Aspiration debit card, you see your own personal sustainability score and how it changes with every transaction. We've created an algorithm looking at 75,000 plus different data points, rating thousands of companies that are the vast preponderance of where people are spending their money, and adding more all the time. And rating each of those companies on people, how they treat their employees, how they treat their customers and so on, planet, how they treat the environment. And really changing that as a really powerful lever, not only for customer engagement, but for taking that $36 billion a day that is being spent by American consumers and helping people make smarter decisions based not just on the traditional metrics of cost and quality and convenience, all of which are still going to be there, but on conscience as well. Our core investment product is the Aspiration Redwood Fund. 100% fossil fuel free, 100% firearm free, invests in companies with very strong environmental practices, employee practices, diversity, governance, 74 plus different data points, and available at $100 minimum investment. With over 50% of our customers setting up monthly recurring investments, so they're putting more and more in. And not only are you not sacrificing returns for this kind of investment, it is literally the #1 performing large cap fund in America over the past year. Thank you. I can almost guarantee we're not going to be able to keep up that record year after year, so I'll take the applause this time. But no matter if we're #2 or 3, it's still going to be a great fund because it's a great strategy. We're investing in companies that have smart management that's thinking about their own future. And that's really what's going to matter overall, because we're really using this to open up not only investing, but democratizing sustainable investing overall. What do we do that's different? If we're really about trust and really about solving that big problem, that means that you can't just take the same things that financial service companies are doing and put it online or do it 10 degrees different. You have to go completely different. And so what we did, we said, we're going to have a business model and fee structure that we call pay what is fair. Customer decides what to pay us. Customer wants to pay us $0, they can pay us $0. Get treated the same as any other customer. If they think that we deserve to be paid $0 for whatever product they're in, then we deserve to be paid $0 because we haven't been doing a good enough job for them. If we are asking them to trust us with their money, their future, we need to be able to trust them as well. And so we started our business based on that. And what we have seen is consistently, month after month after month, over 90% of customers choosing to pay, even though all of them could be paying $0. All of these people who could be, in effect, paying $0 in fees to their banks are choosing to pay a fee when they don't have to. That really changes the nature of that relationship. We then take 10% of what we're earning and from those customers and apply it towards charitable giving, around microloans to further our mission around economic opportunity for people in America. And create these products, as you heard, that help you both, as Ron Johnson said, do well and do good, as we think about it, make money and make a difference at the same time. And so what have we seen? We've been at this for 2.5 years now, and in that time, we have become literally the most beloved financial firm in America. Now that is a low bar. As Mark Flynn mentioned, I used to work in the White House. I was a speechwriter, and when people used to tell Al Gore, you're the most powerful vice president ever, his response was always jumbo shrimp. But we're still proud of having cleared that, because it's about creating this different relationship that we're talking about. We see that in terms of our customer growth. We're growing faster than any other online bank in America, by far, with customer acquisition costs that are a quarter of that of the incumbents. Growing our customers 15% month over month, and growing our revenue 20% month over month. We see it, NPS, Ron mentioned that, obviously a well-known barometer. Believe it or not, banks do not do well in their NPS scores. Average bank, still pretty bad, banking industry overall. The two stars in the financial industry when it comes to customer trust, Vanguard, USAA, actually do pretty well. Here are the best loved brands in America, the Apple, Costco, Netflix, Amazon, these companies that are truly beloved by their customers and have this deep emotional relationship. And here's Aspiration. Unique for a financial services company. Why is that? It's because, yes, we offer great products, and you have to. So we have literally the #1 bank account in America, best banking account. We have the best, or one of the best investment funds in America. But when you ask people, why did you become an Aspiration customer? Why do you stay an Aspiration customer? Only about 20 to 25% mention those products. The vast majority are coming because of the company's mission, values. Those are customers who are going to be sticky. Those are customers who are looking for something different. And those are customers who, as we're going after these infinitely capitalized incumbents, who can always have lower prices, who can always buy technology, are ones that they're never going to be able to reach. And so we see these customers who are coming in for a banking product and then moving into multiple products. When our customers are coming in, 76% have no investments whatsoever. They don't own a share of stock. They don't have a mutual fund share, the ETF, nothing. Even if they have investable assets. They're sitting on the sidelines. They don't like anybody. They don't trust anybody. They don't know where to begin. They're intimidated. Within the first year, about 80% of those people will open their first investment. Those are people who are sitting on the sidelines of asset building for themselves and their future, who are moving into a process that is going to help them build up everything that they want for themselves and their families. And so that's a very deep relationship. And to make this work, you have to have a durable relationship too. And our churn rate of customers is, on a first-year annualized basis, under 2%, and significantly less than that in the out years. That's comparing to about 15 to 20% annual churn for the banks. So these are people who want to become part of Aspiration, want to do more and more with Aspiration. They want to stay with Aspiration for decades. Average age of them is 32. We hope and expect and are building the business so that they're our customers when they're 82. And because of all those factors, that low churn, that high movement into a multi-product relationship, recurring investment, we're actually seeing negative churn on a revenue basis. Kind of the holy grail, right? You know, people, each cohort actually adding revenue as time goes on, as opposed to diminishing revenue. And so I'll leave with, just a thought. We're growing fast, and I think one of the challenges we've been talking about with Mark and with Michael Moe and others is just the challenge of growth and how we think about creating Aspiration as a lasting institution that can become one of the defining and dominant financial institutions in America. And as I mentioned, core of what we're doing is, in some ways, this pay what is fair business model. When we created it, it was created really for all the reasons that I mentioned about building trust in an industry where nobody trusts the incumbents, about really putting us on the same side of the table as our customers. But what I found as CEO is, and this didn't occur to me until a little while in, that what it also does is it changes the way we as a company do business. Because if our customer can pay us zero at any time, and they can change that fee to zero at any moment, it means every time that we touch them, every time that they call into customer engagement with a question, or they lose their debit card and they need to do something else, or they're on our website or our app or anything else like that, we have to so wow and awe and amaze and delight them that they choose to pay their bank when they could be paying zero. That's a very high bar. And again, as I said, the vast majority of the time we clear it. But that means for us, it keeps our mission and our sense of purpose alive every single day in every person in our company. We've received some nice accolades along the way, and one of them was being on one of Fast Company's 50 most innovative, along with Google and Uber and you name it, Apple and so on. But what I always say is, what I was happiest about was when we were in the top 10 in both finance and top 10 in social good. And nobody else had ever done that before. And I'll know that we've truly succeeded as a company when that's no longer the exception to the rule, but the rule overall, and that's the mission that we're on. So thank you very much for having me here today.